Good morning, trading world. It is May 5th, 2023, 8:23 a.m., and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook, closing out the week with no more clarity than we started. This morning will be all about the employment situation that takes place at 8:30 a.m. This could send us back down, which could spark up a wild round of sell side activity, or it could ignite a short-lived rally. The reason why I say short-lived rally is just above is the weekly market makers expected move. This is a powerful level, and it will take a herculean effort to break free of that level once we are in its orbit. On the other side is a wild round of sell side activity because we are already outside of the lower edge of the weekly market makers expected move, meaning market makers have to dynamically hedge with any activity to the downside. Dynamic hedging is where market makers, in an effort to protect or hedge a broad basket of stocks, buy or sell S&P 500 futures to offset losses. And the further we go outside the weekly market makers expected moves lower edge, the more they have to sell futures. So in essence, more selling into selling. We could make it back to the lower edge of the market makers expected move and even go a little past it, but in order to pull off the weekly market makers expected move, we will have to see a huge volume spike either way. If we are on the top side of the line and get a volume spike of 5,000 to 8,000 contracts per minute, then that would be a sign we are breaking through and going higher. However, if we see those volume spikes on the lower side of the weekly market makers expected move, this is a sign we are going lower. The weekly market makers expected move lower edge is around the 408.7 area, and it is almost magnetic unto itself. Because it is a seam in risk where bulls can be temporarily happy as well as bears, so we tend to stick to it. Be drawn into it and chop around these areas. I am still looking for a blow off top kind of day to signify the beginning of a correction, and it could happen today, but so far I don't have that feeling that it will be. Despite that, we have to stay ready because it could happen at any time. We could get some sell side activity today, but I don't expect a full rollover because skew is at a high level. When skew remains above the 130 level, it says to me that people are more prepared for a drop or outsized move. So just taking a moment to see where we are. The purple line here is the weekly market makers expected move. As you can see, yesterday we had a little wild activity dropping outside of it. Now the question will be whether we close outside of it or we make our way back inside. It's really hard to say. It's kind of a coin flip type of action, binary type of action today, especially with the report coming at 8:30. This could take us, that jobs number could be the catapult to push us off of the lower edge of this weekly market makers expected move either to the upside or the downside, depending on what the numbers say. If we're below it coming into the number, it could catapult us up into it and we chop around for a good while. And then who's to say whether we break lower off of it or higher off of it? We just have to see how things react after the open. So that's where we are today. Going into the key levels to watch. Let me bring those up now. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 407, 408 area. Then we have our queen resistance 409 to the 410 area. And you notice that the weekly market makers expected move is between these two areas. Then we have our king resistance area 411 all the way up to the 413 area. On the support side, we have our jack support at the 406 to the 405 area. Queen support 404 to the 403 area. And then our king support 402 to the 401 area. I want to tell you that one of my primary targets for today's upside is going to be somewhere around 409, 409 half. We can see ourselves get all the way up there and then pretty much yank back down into the gravity pool of this weekly market makers expected move before deciding whether we go higher or lower. And the news is out on the jobs number, and it seems like the market was taking it kind of bad because we pushed back down, a decent sized candle back down on that news, but finding support around that 406 area. So we'll see what happens as we go into the opening later today. The main thesis for today is bearish, closing below the 405.13 with a projected target low of between 405 and 401. Now we do have an alternate thesis which is bullish, closing above the 405.13 with a projected target high of between 405 and 412. The main channel that we're in is between 397 and 416. Now yesterday, market strength and breadth opened relatively flat and popped up immediately and fell just as fast to its lows and consolidated on the rest of the day. I expect strength to open much stronger, but possibly finding some weakness closer toward the middle of the day. We do have dissonance between the technical side, which is bullish, and the quant side, which is bearish. The futures have a bearish bias on the day and has dissonance as well between the technical side, which is bullish, and the quant side, which is bearish. I mentioned about the target at the 409 half area. That's going to be interesting to see. That brings us into our scenarios of the day. All right, here we are with our scenarios of the day, starting with our first scenario. And I must say the first two scenarios are pretty much even in probability. So I decided to go with the expanded range day structure first. We could get a pre-market rally consolidate around a target, and I told you to keep in mind I have a target of around 409.5. We could consolidate around that target for a while, then break off and go test lower levels. It is pretty much a binary day, and we could break off to the upside as well. So keep that in mind as the vice versa for this scenario. I'll draw that as well because we could kind of break off to the upside as the vice versa. So this is our expanded range day structure. All right, our next scenario is going to be our trend day up day type. We can open gap up, start with a pushback toward the previous close, find support on or before that previous close, then begin the uptrend for the day. Notice, or pretty much a good bit of that uptrend has probably already taken place pre-market. We usually find our midday chop around either the possible queen or king resistance area. And a key to watch today is that, again, I have a target of 409.5, somewhere around there. We could also have a failed trend day where we reach that target and it's pretty much downhill from there. So we have to be careful about that target today and how we react when coming into that target and the lower edge of the weekly market maker's expected move. All right, on our third scenario, we have our rounded reversal day type structure. And our primary scenario with our rounded reversal day type structure is we could continue to push higher toward the jack or queen resistance area, find midday chop around either the queen or king resistance before going back down with the same amount of force or energy that we went up with earlier in the day. However, we have kind of a weird vice versa alert because we could get something that we don't usually see on our rounded reversal day type structure, and not just the opposite movement. We could get this continued push lower off of the weekly market maker's expected move. And the crazy part about this, because we're already outside of the weekly market maker's expected move, sell side activity could accelerate really violently when we're outside of this market maker's expected move. So we could get something like this where we see a real accelerated or violent down move during that midday chop area, which I would call a midday drop. So we get that continued push lower, and we could see the normal midday chop, but since we're outside the expected move, we have to be prepared for seeing that extra violent activity that could happen when we're this volatile. So that is the rounded reversal day type structure, and the vice versa with a little weirdness because we're outside that market maker's expected move. I hope this helps. Again, wishing you a positive trading day and hoping that you are well within reason and understanding your risk right now, because these are days where things can get ugly really fast. So you have to be really, really careful. Again, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on, and also in understanding the risk in the market conditions. So again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.